Hello, hello, hello. Hey, Childcare Profit Strategy community. It's me, Shanita Jones, the Childcare CPA, your Childcare CPA, and I am here with some very important information to share with you. So, this information is going to be relevant to you whether you've been in business for 1 year, 2 years, even 20 years. These are some of the most pressing questions and some of the things that we have the most understandings about when it comes to childcare and when it comes to taxes. So do me a favor, if you have friends in this community, tag them and let them know I have my list all written out and I'm going to actually go through this list. So as we give everybody a chance to come on in the room while we talk about 10 things you must know about taxes and childcare, I want to tell you how this conversation came about. So, this conversation came about because I actually posted a question in our Facebook group, the Child Care Profit Strategy community. So, if you are not a part of this community, maybe you're watching on YouTube or maybe you're watching on one of the other places that we stream to, make sure you head over to the group and join the group. But anyway, I asked one simple question. I asked people, what do you wish you had known about business before you started it? And guess what? The responses were overwhelming, and the feedback that we got was a lot of people did not receive all of the information that they needed to know about taxes, about payroll, about accounting related topics in childcare. I was not expecting that would be the thing that you guys needed to know the most about that you didn't. Nevertheless, it is, and I am so happy to share it with you. So, as I'm talking, if I say something that you didn't know, do me a favor and say, wow, if this is something that's mind blowing to you. It perhaps may be a topic that I need to go on and go into a little bit more detail about in the future, or if you have a question. Sometimes when I get to talking, the things that I say trigger other questions to come up. So we are here, myself and my team, we are here to support you in your childcare business, not only so that you can make the most money, but we want to make sure that you can keep some of that money too, just as much as you're supposed to. So y'all ready to get into these 10 things you should know, you must know about taxes and childcare. Are you ready to know what these things are? If you're ready to know what they are, do me a favor and type yes, yes. Let me know that you are ready to know what the must know things that you absolutely, positively must know about taxes in your childcare business. So we're gonna start out with number one. Okay. I hope y'all ready for number one. Number one, if you wait until tax season to think about taxes, it is probably too late. Now, that doesn't mean that you should just not file your taxes. I'm not saying that because you didn't have time to plan for 2022, that now that it's 2023, you should just forget about them. No, I'm not saying that. I'm saying that we are still in a year that is ongoing. So you don't want to wait until you gather all your documents and you get your forms and you go to your tax person to start thinking about what your tax season or your tax situation is going to look like. Instead, that is a conversation that needs to happen throughout the year, all year long. A lot of people don't even know which form their business files. And it's not your fault. You don't know because professionals tend to assume that business owners know certain things that they don't always know. Well, see, at Jones Texas, we specialize in working with childcare business owners, and we understand you have so many other things you have to learn, so many other things you have to be responsible for and know. And most of your curriculums that you take do not teach you anything about taxes, accounting, or business related things. But ha, that's why we're there. So, number one was do not wait until tax season to start thinking about your tax situation. Reach out. If you need to get a consultation with an accountant, do that. If you don't have an accountant and you would like to get a consultation or a strategy session is a mini consultation where what we do is we just give you the strategy you need to make sure you're on the right path. But make sure you're looking into these things. Don't wait until you go to file your tax return and then wonder why you owe so much in tax. If that is happening to you every year, it's because you don't have time to plan. Many of the tax strategies that are available to you have to have those in place months before the actual tax deadline. And there are some that you can participate in and you have up to the extension deadline. But guess what? You have to actually file an extension. It's not an automatic thing. And then if you file an extension, there is no extension of the extension. And the deadline is not an invitation, it's not a suggestion, it's an actual deadline. So let's not wait until tax season to make our tax situation a priority. Y'all ready for number 2? Number 2 is payroll. It's about payroll taxes. Now, some people think that there are some things they'll call me up and they'll say, "Shanita, these taxes, they're killing me. I need to do something about it." And I say, "Okay, let's see how much you paid in taxes." And then I look at the tax return and they haven't actually paid income taxes. What they're referring to is payroll taxes. Well, guess what? Unfortunately, for payroll taxes are a direct function of how much you pay in salary. So the federal government has you to pay part of the Social Security and part of the Medicare. Your employees pay the other part and they also pay their own income tax. But as an employer, there are no tax saving strategies. Well, there are some, but those are involved in tax planning opportunities, tax credit opportunities, where you need to actually have these in place earlier during the year. But for the majority of the population, there is not much you can do about payroll taxes, okay? So payroll taxes is something that you really should know. Payroll taxes are the most predictable taxes because it's a percentage. If you pay, and I'm gonna use round numbers as an example. Let's say all of your taxes to the federal government and to your state, to your unemployment and your workers' comp, let's say that's 10%. So if you pay somebody $10 an hour, you should expect to pay a dollar in taxes because a dollar is 10% of $10. So find out what your percentage is. If you're using a payroll company, you should be able to find the math on your payroll company when it says your total liability or your total payments. So as you're budgeting and you're planning out your year, don't forget to plan out your payroll taxes. I've seen a lot of people in the comments and they were talking about expansion. Well, I know if you get in more space and you bringing in more children, you have to hire more staff, right? So with this more staff, it's going to come more payroll taxes. And what you need to do is you need to plan for that. Okay? I have something else to tell y'all about payroll taxes that will make some of you very happy, but that's like point number 6, and we will only moving on to number 3 right now. Y'all ready for number 3? The third thing you must absolutely, positively know and understand about taxes for your childcare business is that tax planning and tax preparation are not the same thing. Tax preparation is what happens when you call up your tax person, or when you walk into that store on the corner, or when you submit your documents into the portal. Your tax professional's job is to do a complete tax return. It is not their job to save you in taxes. It is not their job to give you all strategies known to man under the sun. But every year we meet with childcare business owners that are angry and resentful even because their tax professional isn't helping them save money in taxes. Well, that's because your tax preparer is your tax preparer, and he or she is probably doing everything that they are supposed to be doing to prepare your taxes. But your tax planner, your tax planner's job is to look at today's situation, right? And your tax planner takes the information from today and uses it to shape your tax tomorrow. So your tax planner, his or her job is to actually ask you a gazillion questions and find out what opportunities are available to you. Yes, Miss Love, I don't want to mispronounce your name. Yes, you will be able to make questions later. Your your tax planner, their whole job is to help you save money in tax. Some tax preparers do tax planning, some tax planners do tax preparation, but they are not one and the same. One indication of is your tax professional doing tax planning? Look at your invoice. Does your invoice or your engagement letter just say tax preparation? If that's all it says, you should ask them, what tax planning opportunities are there available to me? And I'm sure that he or she will be able to sell you that additional service. It is an additional service, it carries a lot of value because tax planning is something that won't just benefit you in the year that you have it done, but these strategies can be carried on 1 year to the next as long as your situation remains the same or at least relatively the same. So make sure if you need tax planning, you ask for tax planning. Once we know better, we're able to do better. So when you come to your person and you're having your taxes done, maybe you owe a lot of tax, you're not happy about that. Ask them, do they offer tax planning? If they don't offer tax planning, they probably have a relationship with a reputable person that can help you. We are reputable people that would be more than happy to help you with your tax planning situation. Hi, Miss Queen. Shalom to you too. So, y'all ready to go on to number 4? Number 4, I wanna talk to you about estimated tax payments. So, a lot of you will refer to these as quarterlies, and you'll say, "I need to get my quarterlies done." Well, let's back up and let's talk about that terminology a little bit, shall we? When we professionals talk about quarterlies, we're really talking about those quarterly payroll tax returns, not necessarily your income tax return. But estimated tax payments should be made quarterly. You wanna know the easiest way not to get penalized for not paying enough taxes during the year? Are y'all ready for this? Y'all won't believe how simple this is. The easiest way not to get hit with penalties is to pay at least the amount you owed last year. So if you owed $12,000 the year before, you should pay at least $12,000 in the current year before that April 15th deadline if you don't want an underpayment penalty. Now, you don't need a tax professional, you don't need a tax preparer to know how much taxes you owe so that you can pay this amount of tax this year. So what we do in our firm is we help to educate, equip, and empower childcare business owners so that they can build scalable, sellable businesses and change the world one child at a time. That takes money, and that means you have to be mentally and financially in good position so that you can meet all of the other challenges that you had. So these estimated tax payments, when you're making them, this wasn't a question, but this is something I see going on. When you're making these estimated tax payments, make sure when you go into the IRS or your state website, you are selecting the year you are paying estimates for. If you owe a balance from 1999 or if you owe the balance from 2019, if you don't tell the IRS or your state where to send those taxes, by default, it will probably go towards a balance you may not want to pay. So make sure you slow down, you take your time, and you pay it. By the way, you should not be having anybody else make these payments for you. When it comes down to the IRS, they are looking at you, they are coming for you now. The exception to this is if you're an S corp and you're working with an accountant who is also doing your payroll, maybe that person will help you to pay some of those taxes through your payroll, but usually not. So make sure you're making estimated tax payments. If you haven't made any for 2023 and your business is profitable, and you know you're going to owe tax, I strongly encourage you to make some estimated tax payments. And if you don't want to get a penalty, even if you are making way more money this year than you did last year, and I hope you are, even if you're making way more money, if you just pay what you owed last year, you won't get hit with a penalty. If you don't pay enough, you will be penalized, even if you file an extension. An extension to file your return is not an extension to pay your taxes, okay? So a lot of people are very confused about that. That extension, the government does not give out extensions to give the people their money. The daycare is I mean, the government instead gives you a chance to file. So what does that mean? That means even if you haven't filed your tax return, the government expects you to actually make that payment, and that's why it's called estimated tax payments, because you are estimating what you owe, and you are paying it before it's due so that they do not penalize you. Does this make sense? Does anyone have any questions on that? because I see a lot of people going wrong. We are almost halfway there. Is this helping you? Are you getting something good out of this? Is anybody learning or thinking differently about something they can do to positively affect their financial situation, their family, their business, and stay out of trouble with the feds, most of all, because they just be in the way, right? Number 5, if your business is a partnership, or if your business, let's back up. If you have an LLC, I know a lot of us have LLCs, and I am not here to tell you if an LLC is good or bad. I'm not here to tell you if it's wrong or right. I am simply here to tell you things you should know about filing your taxes. And if your business is an LLC and there are 2 or more people on this LLC, by default, you need to be filing a partnership tax return. 1065, 1065 is the IRS form. That 1065 form usually does not pay taxes, but instead, each LLC member or partner gets their K-1 and that has their share of the profit. But watch this. If y'all took draws, that is not a business expense. Those draws come out of the equity of your business. So just because there's no money in the bank account or very little money in the bank account at the end of the year, that does not mean you will not owe taxes. Am I making sense? Okay. Thank you, Susie. I am so glad. It's a blessing that you are being blessed. So if you are a partnership or a LLC with 2 or more owners, that means you need to be filing this 1065 form. Ms. Robin, you have to invite your husband. He's welcome. And if you are filing this 1065, that needs to be filed by March 15th of every year. If you don't file it and you don't file an extension, you are going to pay $240 per person per month or per part of a month. And there is nothing you can do about it. And guess what? Those penalties are not deductible. So if you have a partnership or an S corporation, or you have an LLC with 2 members and you don't file that return online on time, you are literally giving the government free money. Okay. I don't want to see you do that because we're doing this every day. And it's not because we want to, God forbid, we don't want to do that. But when we know, we don't know better. So but when we know better, we can do better. Yes, we're gonna do better, keep more of our money. Now we're moving on. Oh, partnerships. Let me back up. Partnerships was number 5, but partnerships should go in conjunction with number 4. You should be making estimated tax payments. So if Mary and Jonathan own a childcare business together, they got an LLC, they registered in the state of Texas, right? Mary and Jonathan are gonna pay taxes, not their childcare. So Mary and Jonathan, they need to be making estimated tax payments. Now, I shouldn't have picked Texas because that's a community property state, but in our example, Mary and Jonathan are not married. They're just business partners, right? So you still need to be paying estimated tax payments on your profit from your business, or you can pay it at the end of the year, but the tax is assessed to you personally, not to the business in most cases. So now we can move on to number 6. And 6 has 2 parts, part A, part B. Part A, if you were eligible for the employee retention tax credit, praise the Lord, they basically gave you your payroll money back. And it is still available if you qualify and if you did not get it. Now, here's the 6B part about ERC. And that ERC is the Employee Retention Credit, where the government rewarded employers and helped them out for keeping people working during the pandemic. But let me tell you about this ERC. If you get ERC, even though you may get the check in the mail or the deposit in your bank account, you may get that in the year 2023, but those payments would have been for 2020 or 2021 because it wasn't available for the last quarter. You need to go back and amend those payroll taxes. You need to, well, the ERC people will amend the payroll taxes, but you need to amend your income taxes. And spoiler alert, you gonna owe money. You're gonna owe money because when you originally filed your return, you got to deduct payroll expenses. But then once the ERC was processed, the government gave you back some of that money you paid for payroll. So that means your profit just grew when they gave you ERC the same way that money grew in that bank account. So now you need to go amend those returns and you're gonna owe tax. Now, some people would say, well, I'm not gonna apply for it because I don't wanna owe money in taxes. And I'm gonna give you this analogy. If Shanita Jones strolled up to your house, strolled up to your center and said, I have $10,000 to give you. The only catch is I want you to go around the corner and give your neighbor 2,000. Would you take the $10,000 from me? Yes, you would. Because if I gave you 10,000 and you had to give away 2,000, you were still gonna be $8,000 richer than you were before Shanita rolled up on your house or your center. So having said that, ERC and having to amend those returns is not a bad thing. It's only bad if you don't do it and then the government come for you. Now, this isn't the ERC lesson, so I'm not gonna get into who's qualified for ERC and who's not qualified for ERC. But what I am going to tell you is that if you got it, you need to go back and amend those payroll tax returns and pay the people their taxes. They are giving you the money, you can take it out of the money you have gotten. Number 7, I said a mouthful there. Let that marinate. Let that marinate. Does anyone have any questions about number 7? Do we have any S corps watching? And if you come back and catch this later on the replay, give me a hashtag replay. I like to know you saw this. So for my S corp owners, I know you out here. For my S corp owners, if you're an S corp, you should be on payroll. If you're not on payroll, the government will take all of your draws, and I'm saying DRAWS, like owners draws, but S corps actually take distributions, but most people call them draws, so I'm just rocking out with y'all, right? If you are not on payroll and you do or you're on payroll, but you're trying to pay yourself minimum wage and you know you should be paid more than that, the IRS can come back and they can reclassify all of those draws, all of those personal expenses, all of those distributions, call it payroll, and then look at you for that payroll tax that wasn't paid because you wasn't on payroll or you weren't on payroll paying yourself appropriately, right? So if you're an S corp, you do get paid in 2 ways. You get paid from your W-2, and you also can get paid from your distributions, right? If this is how you're being paid, that profit from your business, you still need to be making estimated tax payments on it. Every year, it never fails. We'll talk to someone who the prior year we helped them become an S corp, and we thoroughly explained it to them, had them repeat it back, and we say, "Now you understand, you gotta pay, estimated taxes on your profit from the business." They say, "Yes." And they go through the year and they do what they're supposed to, and they file payroll, for themselves and their employees, but then guess what happens? They file a payroll, right? But they don't make estimated tax payments. So then they end up owing a bunch of tax at the end of the year, and they say, "I don't wanna be an S corp anymore." Well, guess what? The reason why you're owing taxes is because you're not working with an accountant all year, not a tax preparer, not a tax planner, not an accountant, and you are doing things on your own. You should at least be getting a check-in or a checkup a couple of times per year so that we don't fall into these situations. So if you're an S corp, you belong on payroll. You need to be paying yourself fairly. If you don't, the IRS can come back and wreak havoc. If you didn't do the right thing, it's not too late to fix the right thing for this year. And in fixing the right thing for this year, you can also take care of paying any taxes and just paying the tax part. A good accountant will work things out where all you're able to do is come in there, pay those taxes so you can be on the right track. And not more than you're supposed to. You're only your fair share, only your fair share. So make sure that if you're an S corp owner, you really understand and stop choosing your entities based on people selling information on the internet. Our firm, we're public accountants. We do accounting services, tax preparation, tax planning, monthly accounting, profitability and growth strategies. This is what we do with childcare business owners. That's what we get paid for. So while we do come to you and we give you lots of information, this information isn't really specific if we don't know you and your business. And because we have licenses and insurance, we can't give you specific information if you're not a client. So when you're watching the people on the Instagram Snapchat, now you got spills and thread, and listening to them on Clubhouse, just remember if you haven't actually engaged to work with these people, they could be giving you really good advice, but it could be really bad for your particular situation. So always, always, always make sure that you are listening to people that know about your business and are working with your business in that capacity. If you're working with the bookkeeper might not do taxes. Don't keep asking people that don't know your stuff to go Google and tell you something that may or may not be wrong. We see that happen to a lot of people too. So, do we have any C corps? C corporations, people that file as a straight corporation, not an S corp, the original C corporation. C corporation. If you are a C corporation, you absolutely positively belong on payroll if you work in your business. There are no owners' draws in C corps. There are no distributions in C corps. And C corps have what we call double taxation. It is double taxation because if you take something out personally, that's considered a dividend, and then that dividend needs to be shown on your personal tax return, and you pay tax on it. So you pay tax at the C corp level, and then you turn right back around and pay tax at your individual level. So if you are a C corp, make sure you're on payroll, make sure you're paying yourself appropriately. C corps pay taxes, so your C corp maybe needs to make estimated tax payments as well. So now we're gonna move on to number 9, and number 9 is for my S corps. Oh, my sole proprietors. Sole proprietors. Do we have any sole proprietors? People doing business as DBA, people that know they're filing a Schedule C. Sir, ma'am, listen up. You cannot file your personal taxes and then your business taxes, or your business taxes and then your personal taxes. If you are a single member LLC, or you are a sole proprietor, or you're doing a DBA and you know you need to be filing a Schedule C, your taxes have to be filed all together. There's a special form on there for self-employed people, and it's called a Schedule C profit and loss from business. If you do not include your business stuff with your personal stuff, maybe you don't have it all together. You're like, I'm gonna get it all together next time. The only thing that is gonna happen is the IRS will think you're trying to hide something, you're trying to be slick, and they will audit you. And then you will be in trouble for underreporting income. And if your income was high enough, now you can get hit with a 25% penalty, all because you didn't know any better. But that stops today. You are going to stop throwing money away for things you didn't know, because we are going to obliterate the ignorance when it comes to taxes in the childcare community. And then number 10. Number 10 is the one that will sum this all up. And number 10 is how I can be of service to you. Keeping your books all year long is the best way to ensure that you get every deduction that's available to you. Is the best way to ensure when credits, grants, things are available, you're able to get. Being in a working, open dialogue communication with your accountant on a regular basis, it helps you to stay ahead of the game. It helps you to be aware. It helps you to know maybe you started out making estimated tax payments, and for some reason you don't need to make as many. Maybe there's another strategy that came up. So when we work with our accountants, with our clients, I'm sorry, we actually not only do their accounting and their tax, but we do tax planning as well. So if you keep up with these things all year long, even if you're only meeting quarterly or every so often, doing these things, even just this much, will put you in a much better position. So, how many of you need help, want help, you want to get this together, and you would like to work with somebody that's going to take a holistic approach with your business? We don't just want to do your taxes at the end of the year. In fact, we don't do tax only anymore for this reason. We want to help you with your profitability and your growth. We want you to owe taxes because that means you're profitable, but then we also want to help you with tax planning strategies so that you don't pay any more than you do. So if you've owed 20,000 or so last year, we need to talk. If you know that you are operating a seven-figure childcare business or almost seven-figure childcare business, and you don't have any profit and loss statements, you don't have any balance sheets, you have no visibility of what's going on in your business. You're operating by a hunch. You're looking to see what's in the bank account. Is the bank account balance looking good? Bank balance accounting does not show you the whole truth because, as you see, we talked about sole proprietors, partnerships, S corps, C corps. We've talked about all these different things and how the tax treatment varies. So just because there's no money in it doesn't necessarily mean you're not going to get with a big tax. So what we're going to do is we are actually holding some childcare you're welcome. We are actually opening up our books for next month. We are accepting new clients. If you'd like to learn more about working with us and you know you have some things that you would like to sort out, you want to get some specific strategy for your business, we do have an application because, like I said, we only have 5 spots because we only want to work with childcare business owners that are looking to grow, looking to scale. They want to make more money, they want to save money on tax, or maybe you're having problems and you want to figure out how to get back on the right track. Maybe you got into a little bit of tech trouble. It's okay. We don't judge. So in the comments right now, I'm going to put the link to the application. Now, normally our actual consultation, when we have our consultation fees are much higher. But in the link, I'm actually in the comments rather, I'm actually going to give you the link to our application for a childcare strategy session. On the child care strategy session, this is where you can get your questions answered and you will have a next step to move forward to. So I'm going to read your questions. So if your questions are still coming in, go ahead and post the questions while I am also going to give you guys the link to the application, to the strategy session application. The calls will start next week. Our office is actually technically closed this week. We're closed to do some enhancements. And as we were going over some information and I was looking at the responses, I discovered that this was something that we needed to talk about. So I want to tell you how this application is working. We are asking you a lot of questions up front because when we get on a strategy call, we want to dig into it and we want to talk about the things that are going to help your business. We want to help you make more money. We want to help you save money in tax. We want to help you operate like a bona fide, legitimate business owner and make sure you have an accounting plan in place. So we don't want to spend time. We are live right now, Miss Eva. So we don't want to spend time on a call asking you things that you can tell us up front. We want to be able to look at your situation before we talk to you. And then when we get on the phone, we want to be able to pour into you. So we have intentionally made the application a little bit longer than some people would like because I told y'all we want to work with serious business minded childcare owners who don't mind giving their service provider answers that they need so that we can help. This is gonna be a highly viable call. We usually charge a lot more for it, but it is only $97, and we probably are only gonna take the first 10 to 15 people because I told you, we're only looking to work with 5 more clients, okay? So, I hope that this was viable. I hope you heard something today or learned something today that is gonna help you change your course. I hope that we have gotten a better understanding of taxes and childcare and what that looks like. So the link will be in the comments. You're welcome to grab the link, fill out your application. You don't even get to the calendar to book a call until you fill out the application because we want you to know us, we want to know you, and we really want to give you all the things you need so that we can help your business. And after specializing and working with childcare business owners for over 10 years, I have discovered that this is the best way to best serve. So I look forward to hearing from you. Take your time with the application. Make sure you give us all the information. When I ask you, What questions do you have for us? I want you to ask all the questions that you have for us, okay? I want you to make sure that you're able to tell us what your questions are because we want to get them answered. And that's why we're collecting this information ahead of time. You will not be able to select a time until next week because our team is not in the office. And we also needed a couple of days to go through the applications to make sure that we understand. Also, you will probably receive a phone call from someone on our team. This phone call is going to be to clarify if we need more information. It's going to make sure that we're confirming your appointment. If you don't confirm your appointment, we will reschedule you. Okay? We will reschedule you. So you will either get a phone call, a text message, an email, or you may get all three if we can't reach you. But we ask that you do this because we want to make sure that we can make the most value. If for some reason you are unable to keep the appointment that you scheduled, that's perfectly fine. I understand how childcare works. We just need you to let us know. I think the policy is 24 hours before. We just need us to let us know as soon as you know, because we believe and we understand from prior history these calls are gonna go by quickly, and we only have room for about 10 to 15 of them. So, this is the lowest you will see this. We are excited to help you. Thank you so much for all of your feedback and letting us know how to serve you in the child care profit strategy community. We're gonna be doing something. I'm just gonna put this out there. We will be having a live training on July 18th. I haven't sent out the registration yet, but we will be having, is it the 18th? I might be wrong about the date. I mean, it is July the 18th. So I will be sending that information out soon. We're having a training on July 18th, making sure you have everything that you need to have in place to have your business set up in optimal financial health. Feel free when you get the training. If you have any friends that you would like to invite to the training, feel free to invite your friends so that they can come to the session, so they can get the information. Bring your husband, bring your wife, bring whoever it is that helps you make decisions in your childcare business so that we can go to the next one. We'll talk soon. Thank you so much for learning. I love you all with the love of Christ. Peace.